In Millennials and Money today, a scam alert. Joining us now is Michael Pichik, Commissioner of the Vermont Department of Financial Regulation and the first millennial to lead the North American Securities Administrators Association. Good to have you here.
Yeah, of course, Angela. Thanks for having me. I'm happy to be here. I'm happy that we're talking about millennial issues as well.
Why are millennials at the greatest risk of getting caught up in investment scams?
Well, that's a great question. One of the first thing that we tell investors, whether it's 2019 or 1919, we've been saying it for 100 years, that investors should investigate before they invest. The reality is, Angela, that maybe you or I or other millennials spend more time reviewing the restaurant that we're going to go to on Friday night than we do reviewing the background of the financial professional or the products that were being sold. And of course, that financial professional and the products that they're selling represent very important things for us: retirement security, home ownership, children's education. So we really should be spending some time to ensure that these financial professionals are licensed, that they're registered within the state, and that the products that they're offering are registered within the state. So that's the first thing we tell investors, regardless of if it's 2019 or decades ago. But of course, another thing that investors really should be looking out for are the hallmarks of fraud. There's certain things that you can guarantee will be there when a fraudster is trying to depart you from your money. Number one is the outsized returns. So you'll anticipate that the stock market year over year for decades on end will earn approximately 7%, let's call it. Bond market a little bit less than that. So when you see outsized returns, meaning 20%, 30%, even sometimes 15 or 12%, and those might be harder to recognize, certainly that's a red flag for investors. Another thing is the fact that an investment is guaranteed or that there is no risk. As you know, any investment comes with risk. It's just a matter of how much risk. So anyone that says an investment is guaranteed, a return is guaranteed, that is again a hallmark of a red flag. And then again, trying to create a false sense of urgency, trying to get you to get into an emotional state rather than a rational state to get you to make a bad investment decision. So any legitimate investment that they're trying to get you to invest in today will be there tomorrow and will be there next week or next month. So never feel a sense of rush, never feel that you have to be rushed into an investment or that there's some urgency to getting in now or today.
Can you list some of the ways that millennials and maybe everybody else can avoid getting ripped off in investment deals?
Well, that's a great question, Angela, and I hope millennials don't take any offense to this, but being a millennial, I hope I have some cred. But there is a gap between the confidence of millennials when it comes to finances and the actual knowledge of millennials. So when you ask millennials, where do you rank in terms of your expertise? 70% will say that they are a financial expert. However, when given certain questions and asked to determine what their competency is in terms of financial literacy, only 24% of millennials even met the very basics when it comes to finance. Many more, obviously, were considerably worse than that.
Any other suggestions on spotting bad investments? What are you seeing?
When there's that gap between the level of confidence and their actual ability, their actual knowledge, that's a recipe for disaster, because they're not going to recognize those red flags that we just talked about, and they're not going to recognize investments that might be legitimate but not right for them, that are too volatile. Maybe they have too much risk for a certain reason. They're not going to get them enough return over the years. So these are other issues that millennials are going to deal with. Another issue is just where millennials are compared to other generations. So 50% of millennials have student loan debt. Only 60% of millennials have started saving for retirement. Actually, I think the number is that 60% haven't even saved a penny for retirement. So when you think about that, they're also trying to get outsized returns. And again, that was one of the hallmarks of fraud. They're trying to find the yield. They're trying to find areas where they can make up, retire their student loan debt, start saving for retirement, start buying a first home. So certainly they're on the lookout for those types of frauds that might be out there. So certainly I encourage your viewers to go to your state regulator website. Every state in the country has a securities regulator. Like me in Vermont, we have a lot of information on our websites to protect yourself from investment frauds, to file complaints, to ask us about information. And then, of course, you can go to our National Association website, NASAA.org, NASA.org. a lot of information there for investors, a lot of good information about protecting yourself in 2019 and beyond.
Thank you, Mike, for coming on our show. We hope to have you back.
My pleasure. Thank you, Angela.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.